Today is Monday, August 21st, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Well, gentlemen, I see you're all ready for today's solar eclipse. Maybe you could comment, Alan, on what has happened or what normally happens when there's a solar eclipse in the market.
Well, the last eclipse was, I believe, 99 years ago, so I can say that since then the stock markets have been substantially higher. So I would have to look at this as a bullish indication for the indices. Plus, we also have the added advantage of low interest rates. So for a variety of reasons, I do believe that stock index futures will continue to advance, not just because of the eclipse indicator, but because interest rates are low enough that the bull market will continue.
Steve, does the eclipse have any indication in regard to, will grains get a big bounce off the big eclipse here today?
No, I really don't think so. I think that we're dealing with three factors. Number one, we're still trying to recover from the USDA's bearish report. We really don't see a weather problem over the next 30 days that's going to affect prices. And we are seeing a little bit firmer cash basis because farmers aren't selling. But as we approach harvest, prices are still expected to trend lower.
So fundamentals of the grains, weather's good, big crop expected, still good stocks out there. Anything else we should be thinking about?
Well, I think first of all, we've been noticing that open interest in the corn is holding near the levels we've had most of the year. And the managed funds have a small net long, and the commercials are reducing their net short, suggesting the farmers aren't selling. Over in the beans, open interest is going up, and the funds are adding to their short positions, but also the commercials are taking off some of their short positions because the farmer isn't selling. And over in the wheat, open interest is going up, and the funds are adding to their short positions. So they're trading the fundamentals. We're also looking at this week, we've got a crop tour that's going through the U.S. and we'll see, historically this group comes in below the USDA's corn and soybean August yields. So we'll see if they do that and if that helps the market at all. USDA is estimating the crop ratings below a year ago for both corn and beans, but the USDA is pretty quick to say, and the NASS group and the World Outlook Board both, that you shouldn't use crop ratings to come up with yields because the data that NASS gets is from different sources than the data that the Crop Reporting Board gets. So they're like two different data sources. And then finally, we estimated the corn stocks and bean stocks and also the wheat stock, corn and bean stocks as of September 1 will be higher than a year ago. Wheat stocks might be a little bit lower, but not marginally. So everything that we look at suggests the glass is still half full and that prices should trend lower.
Let's talk weather for a minute. The forecast maybe for the rest of the summer, and what does the fall look like? I have heard some whispers about a potential early frost.
Well, our weather consultant reminds people he hopes he's 50% right about 30% of the time in long-range forecasting. But on Friday he put out a forecast that basically between now and through December we're going to see near normal to maybe a little bit above normal temperatures. But we're also going to see a wet fall, and so we'll just see if that impacts harvest at all, impacts quality, or at the end of the day if he's right.
A lot of times we talk about the US dollar when we're talking to Alan, but I want to ask you a question, Steve, about the dollar. It's come well off its highs since last year. Why is this not helping the grain market? Normally, from an export perspective, it helps the grain market.
For the most part, our buyers are not dollar sensitive, like China and the soybeans, Mexico, Japan and the corn, and we're losing export share every year in the wheat because of competition. The main reason is that everybody has more grain to sell than we do, and they usually tend to price it below our prices, whether it's currency sensitive or not. The USDA is estimating this year that we'll ship 5 billion bushels of corn, beans, and wheat, whereas the past year we did 5.4 billion. So it's all due to the competition from other sellers.
And why don't you give us some thoughts on the U.S. economic outlook in light of the news that the U.S. consumer sentiment increased for the first half of August to its highest level since January?
Well, I believe that the U.S. economy is going to improve more than many analysts are anticipating, and I think that's the same situation globally. When we take a look at some of the industrial commodities, we just saw the copper advance to a 33-month high. In fact, that was today. And the zinc market is up to a 10-year high. So there is quite a bit of demand for industrial commodities, which would suggest that the global economy is likely to improve. Also, the Atlanta Fed is now predicting that the GDP in the third quarter will be up 3.8%. That's much better than what we saw earlier in this year. So there's a lot of evidence indicating that the global economy is going to do quite nicely.
Now, turning to the stock market, stock index futures came under pressure last week as political tensions in Washington heated up. What is the outlook for stock index futures now? Any changes?
The only thing is, of course, we do have these political problems, which I think will only temporarily get in the way. They did some damage last week and a little follow-through as well today. But the outlook remains the same longer term. It's the interest rates that dominate, and especially once these geopolitical problems and tensions in Washington subside, we will see another leg higher in all of the indices.
What about gold futures? I mean, they advanced to a new 9-month high on Friday. Do you feel this will continue? What is the price outlook for gold futures? And how can the stock market continue to go up with gold going up at the same time? I mean, normally they would be counter-cyclical to each other.
In this case, if the global economy is improving, of course that would help the indices. And also an improving global economy means more inflation. So with the circumstances that we have right now, both the indices and the gold can work higher from an improving economy point of view. Plus the geopolitical problems, while a bit negative short term in the indices, is very much an additional bullish factor for the gold market. So gold appears to be the best long right now. Any breaks should be used as buying opportunities. And I think the advance that we are anticipating in gold should continue all of this year and well into next year.
All right, remember the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Arthur Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.